The crypto market is entering a decisive stage, and the signals are coming directly from the highest levels of global finance. Federal Reserve Chairman Jerome Powell has stated that U.S. banks are perfectly capable of handling cryptocurrencies. This might sound like a simple comment, but in reality, it represents a turning point. For years, there has been hesitation and uncertainty about whether traditional banks could ever move into crypto custody or direct integration with blockchain networks. Now, the head of the U.S. Central Bank himself is confirming that the infrastructure and readiness are in place. This is not speculation anymore. It is official acknowledgement, and it changes the narrative completely for assets like XRP. The timing of Powell's statement is crucial. Fedwire, the real-time gross settlement system operated by the Federal Reserve, officially transitioned to ISO 20022 messaging in mid-July. ISO 20022 is the global standard for cross-border payments and financial communication, and it is the same standard that Ripple has built its solutions around. This means that the United States has now brought its most important settlement system into alignment with the standard that underpins RippleNet and the XRP ledger's use cases. The alignment between the Federal Reserve, ISO 20022, and Ripple's infrastructure is impossible to ignore. It positions XRP as the natural liquidity bridge for the next stage of U.S. banking integration with crypto. At the same time, market conditions reflect the uncertainty surrounding interest rate policy. The crypto market has been in correction as the probability of a September rate cut declines sharply. Earlier this summer, the market priced in a nearly 99% chance of cut. Now that probability has dropped to the low 80s, and investors are pulling back in both equities and crypto as a result. Bitcoin, Ethereum, and XRP have all retraced slightly, while some altcoins like Chainlink and Cardano continue to show isolated strength. This volatility is not surprising, but when you combine it with Powell's words and the integration of ISO 20022 into Fedwire, you can see the groundwork being laid for long-term adoption rather than short-term speculation. Meanwhile, political developments add another layer of context. President Trump has hinted at a major announcement at the White House as the United States coordinates with Europe and Ukraine on the war. These events may not seem directly tied to crypto, but the geopolitical climate is shaping the urgency of financial innovation. A more interconnected world requires faster and cheaper cross-border settlement. XRP was designed for this exact purpose, and with the U.S. banking system modernizing its rails, the stage is being set for Ripple's technology to fill the gap. Of course, the legal case surrounding Ripple and the SEC has not fully closed. Many believe the lawsuit was resolved, but the appeals court still has to deliver the final official confirmation. While Ripple and the SEC have already agreed to settle, the court stamp of approval is required to formally close the matter. This delay has created confusion in the market, with many retail investors misled into thinking the case was entirely over when in fact one last procedural step remains. But the outcome is already clear. The settlement has been reached, the appeal will be closed, and the distraction that has hung over XRP for years will finally end. It is worth noting that this entire legal battle has been criticized as a deliberate distraction. Many argue that the United States used the lawsuit to delay retail adoption and suppress XRP's price, while banks and institutions quietly prepared their own adoption plans. Whether intentional or not, the lawsuit has not stopped Ripple's progress overseas, nor has it slowed the integration of ISO 20022 across global financial systems. With Powell now saying that banks are capable of handling cryptocurrencies, the contradiction becomes obvious. The regulators spent years fighting XRP while at the same time building the rails that make it indispensable. For XRP holders, this moment carries enormous weight. When the Federal Reserve acknowledges that banks can manage crypto, when Fedwire is operating on ISO 20022, and when Ripple is positioned as the provider of liquidity solutions that connect directly to these standards, the logical conclusion is that XRP is no longer on the sidelines. It is being placed at the center of the infrastructure that will drive banking forward. What happens next is not about hype or speculation. It is about systemic adoption. The months ahead will be crucial. The final confirmation from the Court of Appeals will close the book on the lawsuit. The Federal Reserve will continue implementing ISO 20022. Banks across the United States will begin exploring real integration of digital assets. At the same time, international markets like Europe and Asia are already moving forward with stablecoins and central bank digital currencies. All of these roads lead to the same place, a financial system where XRP serves as the bridge asset. This is the bigger picture. Short-term corrections in price may capture headlines, but the structural shifts are far more important. The adoption of ISO 20022, the confirmation from Powell, and the approaching end of the legal saga are converging. These are the signs of real adoption. The question is no longer if XRP will be integrated into the banking system. The question is when and how large its role will become. So as we watch markets react to shifting rate cut expectations and political headlines, remember that beneath the noise, the foundation for XRP's adoption is being laid in real time. From the Federal Reserve to the global banking community, the infrastructure is aligning. And when the system is ready to move, XRP will already be in position. Do you believe XRP will be the first cryptocurrency fully integrated into US banking infrastructure? Share your thoughts in the comments and join the discussion.